Hello and welcome to Energy Frontiers, proudly brought to you with support from the African Energy Chamber. I am Justina Okechukwu. As always, let's get started with top energy news from across Africa and around the world. The Organization of the Petroleum Exporting Countries and its allies plan to meet in person in Vienna on Sunday, June the 4th. Ahead of that crucial meeting, some traders say that the group is unlikely to deepen supply cuts, while others sit on the fence looking to see how the group of oil producers intend to keep production steady in the current year. A new report by the International Energy Agency forecast global renewable power capacity to surge by 107 gigawatts to more than 440 gigawatts this year and continue next year, with the world's total capacity rising to 4,500 gigawatts, equal to the total power output of China and the United States combined. Now, as part of efforts to meet its energy demands and become climate resilient, Ghana has received approval for the acquisition of a backup facility to host the country's first nuclear power plant. Ghana is looking to transition to nuclear energy by the year 2070. South Africa's new electricity minister, Hosiencio Ramakopa, said the country is in talks to buy more than 1,000 megawatts of additional electricity from Mozambique between the short to medium term, after certain conditions and agreements have been fulfilled. South Africa is hurting badly from gross inefficiency and troubles of its utility giant Eskom. In North Africa, the Moroccan government and China-based battery maker Goshen High-Tech have signed a deal to set up Africa's first gigafactory towards the production of electric vehicle batteries in the kingdom, with up to $6.3 billion in investment monies from the partners. And that was a snapshot of your energy news headlines. When we return, connecting Africa and European energy sector investors, details after the break. This is Energy Frontiers. The Paris Roadshow of the African Energy Chamber's Invest in African Energy Forum was held on Thursday evening, with opening remarks from industry leaders from across the African and European energy landscape. The one-day event saw ministerial remarks from Namibia's Minister of Mines and Energy, Tom Alwendo, Congo's Minister of Hydrocarbons, Bruno Itwa, and the Minister of Hydrocarbons of the Democratic Republic of Congo, Didier Budimbu, among others. Speaking to Congo's progress on the gas monetization, Minister Itwa confirmed that the country is looking at first exportation of its liquefied natural gas by the fourth quarter of this year and a promotion campaign for gas towards the end of the year. In the meantime, Congo inked a cooperation agreement with the French company Technip Energies, which will see both parties expand cooperation in the fields of offshore and onshore energy developments. The DLC Hydrocarbons Minister Didier Budimbu said the country is working on legal incentives to attract investment, with hydrocarbons potential standing at 22 billion barrels of oil. Still on the Invest in African Energy Paris Roadshow, Namibia's Minister of Mines and Energy Tom Alwendo said the country does not have plans to raise its stake in existing licenses, but it's assessing ways by which funds raised through oil and gas can be redirected towards the local community. The African Energy Chamber event also saw panelists discuss emerging trends and financing mechanisms for Africa's upstream sector, the need for enabling environments, and more offshore opportunities to allow for favorable fiscal terms and simplified business procedures. The Invest in African Energy Roadshow comes ahead of the bigger annual gathering of the African Energy Week scheduled for October 16th to 20th in Cape Town, South Africa. Don't miss that bespoke global event.
Imagine a future where tomorrow's solutions build a world of opportunities for all, and where human potential is truly realized, where every child has an equal chance in life, no matter where they were born. Imagine the potential of a continent built on low-carbon oil and natural gas and abundant renewable energy. Imagine Mozambique, Angola, Nigeria, Uganda, Senegal, Egypt, Namibia, and Algeria being let free to develop their natural resources without pressure from wealthy countries to leave it in the ground. Imagine an Africa where we cut red tape bureaucracy and provide better fiscal terms so we can compete globally for energy investments. African Energy Week is the African Energy Chamber's annual event held at the Cape Town waterfront, uniting African energy leaders, global investors, and executives from across the public and private sector for 4 days of intense dialogue on the future of the African energy industry. Showcasing the latest technologies and innovations to 5,000 plus registered delegates from over 100 countries and international professionals from across the global energy sector. Be part of the future of the energy industry and join the energy movement by becoming an official sponsor, exhibitor, delegate, or partner. African Energy Week.
Welcome back to the program. Nigeria's national petroleum company, the NPC Limited, this week announced the full deregulation of petrol product prices, especially for petrol or premium motor spirits. The threefold increase in pump price follows the allusion to full fuel subsidy removal indicated in the inaugural speech of the new president, Bola Ahmed Tinubu, on Monday. The head of the NNPC, Mele Kyari, says the organization is no longer the sole importer of petrol products into Nigeria, adding that all importers would have to source their currency needs at the same exchange rate as the NNPC from Central Bank. I am now joined by Kola Karim, Group Managing Director and CEO at Shoreline Energy International, to discuss these latest developments at the NNPC. Now, what does this imply for the distribution and marketing of petroleum products?
Look, Justina, the problem in Nigeria is a very simple one, but it's a difficult one at the same time. President Bola Ahmed Tinubu, in his acceptance speech, said it all. Subsidy is gone. And that's exactly what he has done. We now have a regime of selling petroleum products, which is premium motor spirits, petrol, at ruling market price, so government will no longer subsidize this commodity. This is a huge thing. Nigeria has been spending 400 billion naira a month in subsidizing petrol. This is not sustainable now, it's not sustainable tomorrow, and it's not sustainable ever. That is almost $1 billion being spent a month. So we're talking about $12 billion a year, which could be pointed into other deserving areas of the economy, like adequate infrastructure, support services for transportation, and also social contributions to ameliorate the terrible position to a lot of Nigerians who needs that support.
Now, what is the role of the private sector post-subsidy and in meeting the demand and supply metrics?
Look, the demand and supply curve is always going to be there. But what this has done is you and me could apply for a license and import petroleum products into Nigeria, source our dollars. Is a matter then of market forces, demand and supply, and that equilibrium gives you if the business makes sense and you're going to make a profit, then it's a venture to get into and get involved with.
But how do we ensure transparency and accountability in the management of funds saved from the removal of fuel subsidies?
It's not money saved. It's additional money that should have been spent that is not spent. So the accountability that's ongoing now in the various ministries and government MDAs is what still stays. Look, if government is not spending $1 billion in subsidies, that means there's additional $1 billion that will be budgetary allocation that will be pointed into education, that will be pointed into infrastructure, that will be pointed into transportation. So accountability is not really the question, because government indices and indicators that have been put in place will not go away. That is the same indices that's used to measure the performance of the Ministry of Transport, the Ministry of Works and Housing, the Ministry of Education. It just means they will have additional money to do more.
Now, speak to me about the OPEC meeting coming up on Sunday. What are your expectations and what further impact will it have on Nigeria's fuel prices?
Look, the good thing is this. It's good and bad for Nigeria. On one hand, we're a major oil producer, and 90% of the dollars into the coffers of the government of Nigeria comes from oil sales. But on the other hand, we do not have proper refining capacity and capability in country, other than Dangote refinery that's going to come on stream shortly after the commissioning. When that happens, the effect on the Nigerian economy will be twofold. Prices of petroleum products in Nigeria will be somewhat cheaper. You know why? Because you're no longer paying for freight to ship it. Today, we're buying petroleum products from refineries as far as Russia, as far as other places in South America, so Europe, coming to Nigeria, which means you have to ship it. But if it's being produced here and being processed here, you're not paying for shipping other than the standard logistics in country. So that's a huge savings from there. The second point is this. The value add to Nigeria is the crude that is going into these refineries, like Dangote refinery, is produced in Nigeria. Nigeria just needs to ensure there is a lot more investment in bringing up more production, that we can increase our crude oil production. Now, what is my expectation from OPEC? The price is rallying, and the factors, there's several factors. One, Russia, Ukraine. A big supplier of crude oil into Europe and to European refineries is Russia, and that supply is being cut out. So they need to substitute it, and when you need to substitute such a volume, it helps shore up prices. The second one is we're in the European summer season and the North American summer season, and what happens? People drive more. So consumption of petroleum products and crude to be refined in refineries is considerably more also in the summers, and that's what's holding up prices. But the biggest add-on is the US government has just sorted out its internal problems about its debt ceiling, which means that's gone out of the way. There's available capital to finance lots of more trade, more imports that energizes and keeps the American economy going. So there's certainty of monetary supply. And that is a big factor in seeing prices go up. Now, what would OPEC do? Expectations from OPEC is there's not going to be a change. We're going to stick to the 1 million barrel cut. OPEC countries have suffered during pandemic. This is what is helping them shore up their own national balance sheet. The same with Nigeria, and we will not wish. Oil producers like ourselves, we suffered during the pandemic, so this is the time for us to claw back some of the monies we've lost, so we will not wish to see low oil prices.
Now, 3 days after Nigeria's fuel subsidy removal, the Angola government also announced the gradual removal of fuel subsidies, which goes into effect immediately, pushing pump price to 300 kwanzas per litre. The government in Luanda, however, retains subsidies on other petroleum derivatives such as diesel and cooking oil. Angola is expected to continue the process of subsidy deregulation until 2025. And that's how we wrap up the package of the show this week. We thank you all for watching, and we appreciate the support of the African Energy Chamber towards the production of the show every week. Remember to follow the program on Frontier Africa Reports website, subscribe to our YouTube, and follow us across all our social media handles as indicated on the screen. It's goodbye from me, Justina Okechukwu. I'll see you soon.